identifying and acquiring funding resources. Did you want to share anything before I get started?
Yes, I'm not sure. I think we're still connecting, Kari. So let's go ahead and get started. Again, I apologize, a little bit of technical difficulty, but yes.
Okay, great. So it'll take us just a minute to pull the slides up. While Lisa's doing that, I might just go ahead and kind of talk a little bit about the objectives we're going to cover tonight. Our goal today is to help you understand 3 key points. First of all, we want to explain how Medicare changes are affecting what is covered. Second, we're going to learn more about the different funding options that can help pay for senior care. And lastly, we're going to talk about what resources are available and how to get them. Lisa and I have a variety of experience in the senior care industry. Personally, with Amada Senior Care, we're doing in-home caregiving. And with Lisa, she works in a residential community in assisted living and a memory care, which she'll share more about that with you. But that's kind of where we've gotten a lot of our experience. And we've just run across a lot of seniors who have questions. So this is something we wanted to provide to the community to show you what's available and talk a little bit about where you can find some resources. Okay, Lisa, I think I'm maybe 2 slides.
Ready to get started?
Yes. So
great.
Next slide and one more. Can you go one? Yeah, there we go. So really the biggest hurdles families face is how to pay for senior care. Medicare has really ramped up its efforts to save money, and the Affordable Care Act has changed the environment from a fee-for-service to value-based care. What that means is medical providers are looking for ways to save money. So what that means to you is that hospitals are going to be just charging patients a lot sooner, whether it's a hospital or a skilled nursing facility, and often you're just charged with little notice and few resources. The thing is that life is going to happen. Someone, whether it's you or a family member, they're going to have a fall, there's going to be an illness, that may be dementia. And if you prepare ahead of time, it makes things much easier for you when these emergencies do happen, if you know what your plan is going to be. Next slide, please. You may have more options than you think. Figuring how to finance your senior living options can sometimes feel like comparing apples to oranges to avocados, but it doesn't have to be that confusing. So we're going to look at 5 ways you can stretch your budget when it comes to paying for senior living. Next slide, please. So here are some of the options that can help you pay for additional senior care services. Long-term care insurance is an option. Are you or was your spouse a veteran? Maybe a bridge loan can help you buy some time. Do you have a life insurance policy, or maybe you own your own homes? These are some of the things we're going to get into tonight that can help you in the long run. Next slide, please. 10 to 15% of elderly have long-term care insurance. If you have one of these policies, you have a guaranteed funding source to help you pay for either a skilled nursing facility, home care, assisted living, or memory care. The downside with this is that families have to be educated on what's in their policies, how to file a claim on it, and how to use it. If not, you can easily be taken advantage of. Next slide, please. So in the past, insurance companies who sold these policies were very aggressive. So they're in kind of a tight spot. Many sold benefits they expected to never have to pay claims on. And why is that? Well, life expectancy has grown significantly since these policies were introduced. In the past, there was a lot more sudden death, like heart failure, or those things have been replaced by dementia and Alzheimer's, which tend to last longer and have more care needs associated with them. So when they wrote these policies, they expected a lot more of the policyholders to surrender their policies, but that's not happening. Guess what the number of policyholders that surrenders their policies are? It's less than 1%. So very few people give up these policies. The only way families can assure that they get what they've paid for is to really understand what's in their policy before they file a claim. If we left Medicare billing up to ourselves, we probably wouldn't get reimbursed very well. So that's why it's really important to understand. At Amada, we offer a free 45-minute consultation that can just give you a policy review. And it might be something that you are not planning to use for 10 years, but just knowing what's in the policy makes a big difference when the time comes. Next slide, please. So this is what all policies have in common in some form or another, and some of the questions that families need to ask. The elimination period is kind of like your deductible, and it can either be actual days or calendar days. If a caregiver comes into the home for 3 days a week, does that count for 3 days of the elimination period, which would be actual days, or is it calendar days? If they come in for 3 days, it might count for a whole week, so 7 days. Also, sometimes if the policyholder came straight out of a skilled nursing facility, a lot of times those days will count and they can cover their whole elimination period that way. Sometimes there are coordinated care benefits in certain policies that allow them to immediately waive the elimination period for the client, and they can go straight into home care or assisted living. And that's just an example of some of the questions that we vet out on the front end to help save the clients money and on what they have to pay out of pocket. The maximum daily benefit. A lot of policies have a maximum daily benefit, but they also have an inflation rider that makes the amount go up every year. So we need to make sure that the families understand how much they currently have to use each day and not what they originally had in their policy. Maximum lifetime benefit refers to how long does the family have to use the policy? If they don't use their maximum amount each day, does that go back into the policy and they can use that coverage later? And this is a really important one, the covered benefit. I've had a lot of families be surprised by this. So you need to know what benefits are covered. Some policies only cover skilled nursing or home care. Some cover assisted living and memory care, and some cover everything. But many clients have been surprised that they may be ready to move into, or they may want home care and find out their policy only covers assisted living. So it's something that you really want to make sure you know. And let's see what else. So I've kind of touched on this a little bit already, but it's really critical to know what's in your policy before you file a claim. The devil really is in the details, and you want to be sure what's covered. It's wise to have an advocate do a policy review. Like I said, we're happy to do that at Amada, or your insurance agent could come out and do a review with you. I would keep all your documents together just in case there's a need. Everything's ready to go. Many families I meet with vaguely remember having a policy. They don't know where it is. They don't know their policy number. They don't know the name of the carrier. And it's, you know, those are things that are easy to forget, but if you have it all current and put together, then it's going to be much easier to access when the time comes. Next slide, please. So now we're going to talk a little bit about the Veterans Aid and Attendance Program. And this is something that was developed to help veterans and or their surviving spouses. This is something that can be used for care needs in the home or assisted living. If you were a veteran or married to a veteran, you can qualify for between $1,176 to up to $2,903 per month for care expenses like home care or assisted living. Sometimes there are new regulations that they changed in 2018, which are good and bad. They're good because it has made it easier for veterans to qualify, but they can be bad because the people who used to help with this benefit are no longer willing or able to do so because of the rule changes. That's because one of the new rules is there's now a look back period, which means that similar to Medicaid, that people who have moved assets will no longer qualify. Many of the people who used to help qualify made their money based on moving assets around or setting up annuities, but that's no longer something that they can do. Next slide, please. So Are there a lot of people that would qualify? Well, there's a lot of veterans, and combined with their spouses, it's estimated that about 11 or 12% of the population over the age of 60 could qualify. And in West Virginia, our population of veterans is about 10%, not counting spouses. Next slide, please. So here are the actual dates that the VA uses as wartime. You have to have either served in World War II, the Korean conflict, the Vietnam era, or the Persian Gulf War at this time. Next slide. So you, the veteran and or the spouse, can qualify when you require assistance with ADLs. So that's similar to long-term care insurance. You have to need assistance with at least 2 usually of bathing, dressing, assistance with ambulation, transferring, toileting, feeding. You have to have a doctor verify that you need this assistance, and you have to meet the financial qualifications, which are based on income, assets, and care costs. Next slide, please. In addition, you have to have received an honorable or a general under honorable discharge. The surviving spouse has to have been married to the veteran still or at the time of his or her passing, and not to have remarried, and they have to be at least 65 years old. Next slide, please. So these are the amounts that can be expected. As you can see, this is a significant amount. If you're talking about this on an annual basis, this can go a long way to helping provide some extra care for whether it's in-home or assisted living. Next slide, please. This is a list of the documents. I'm not going to go into detail, but you do have to gather quite a few papers. And when we talk about resources at the end, I can tell you where to get a list of these things. Next slide, please. This is one of the changes that was made in October of 2018. So there is now a look back period. And the biggest thing is that within the last 3 years, you can't have moved assets around, or if you did, they'll still count towards your asset limit. And the other new regulation is the asset limit is now $127,601 for all applicants. So it's a flat asset limit now. It used to be kind of variable, and your income can be included in the assets. Next slide, please. So new rules allow family members to keep their homes even if the veteran goes to live in an assisted living facility. The home will not count towards the assets. And that is still the case in the new regulation. And in addition, this on the other side of the slide, it talks about instrumental activities of daily living. And that's just referring to some of the things that aren't really considered activities of daily living, but are still essential for living, like shopping, meal prep, transportation. So now those do count if you need assistance with those at home for a caregiver. Next slide, please. Here's an example of how this formula works. So you take the veteran's assets of $110,000 and you add them to his income of $40,000, which gives him a total of $150,000. But then you can subtract his care costs, which are $30,000, and you have the asset amount of $120,000 left, which means the veteran qualifies for the benefit. In this case, he qualifies for $9,000. So that's $9,000 extra dollars he could use towards care costs. Next slide, please. So as with anything that goes with the government, it's a bit of a process to submit an application, and you have some options for that. You can do it on your own. There's a lot of resources available online. You can work with a third party. Some attorneys used to do a lot of this, not as many because of the rule changes. You can call Amada. We have a full-time person in California that can help you figure out whether or not you're qualified, and if so, point you in the right direction or get you through it. Or there's some other organizations. There's Veterans Care Coordination, Vet Assist. Those are programs that can help you get the assistance, but they do take a cut of of what you get afterwards. But as you can see by that prior list, there is a lot of paperwork involved. So sometimes it is worth getting some help and submitting your application. So with that being said, I covered the long-term care and the veterans aid and attendance program. I'm going to turn the presentation over to Lisa, who's going to cover a few more funding options that are available.
Thanks, Kari. So give me just a moment, please. Okay, good. So bridge loans, let's talk a little bit about that. And my name is Lisa Pauley, and I work with Brookdale Charleston Gardens. We are an assisted living community. So, and Kari and I work together all of the time. We work with families on a regular basis, helping to figure out options on how to fund senior living. It's just very important that people get this information because it's a lot of decisions they have to make, and healthcare is expensive. So bridge loans are they offer to help cover senior living costs while you wait for the sale of a home, or you wait for other benefits to kick in, like the VA benefits, for example. There are different institutions that are available that can help provide those services. Bridge loans are designed for seniors. They provide the funding that you need to get into an assisted living or to get care into your home while you're waiting, like we said, for other funds to come through. So let's talk a little bit more about the bridge loans. Bridge loans are designed to help cover the costs, as we discussed, with senior living during the transition. Your need for senior living can be expected and sudden due to medical emergencies. And that's something that's very important. Every day, Kari and I get phone calls with families that my mother is in a skilled nursing facility or in the hospital. She's being discharged. We cannot take mom home. We do not have a plan in place. We do not have access to the funds immediately that are necessary. We have different accounts that the money has to be moved around, or we need to sell the home to provide care. We need VA benefits to be able to afford care, those types of things. That is what a bridge loan is actually designed for. It is short term. It is a very low, very short and low, can't think of the word I'm trying to say. Anyway, and a lot of people need to get the bridge loans to help them get started. And once those funds kick in, then they can certainly pay back for the bridge loan. A lot of corporations, I will tell you, assisted living facilities, they will also pay the interest. That's the word I was looking for. Sorry, the interest on your loans for up to a year. So that's something else that you might want to look into if you're going into assisted living community, that you might want to talk with them about that. Bridge loans, as that was saying, does help you make a quick transition. And that's something else that I'll say. When you're in a rehab in a skilled facility, a lot of times they will give you a cut letter, which gives you 24 to 48 hours to be discharged and find your next place that you're going to transition to, via home, assisted living, or wherever. That does not give families enough time to get things moved around and make the transition comfortably. So bridge loans are a really good option when it comes to things like that. So finally, whoops, excuse me, let me go back. Bridge loans, well, I went back too far, I do believe. Apologize for that, hang on a minute. We touched on that they'll pay, the funds are typically processed within 24 hours, which is very important. Again, we discussed the 24 to 48 hour discharge. So that's very important. And the other thing that we need to discuss is they will allow up to 6 applicants, one loan application. So that helps with families to divide that responsibility and for a quicker process. They do have the benefit of a 24-hour approval rate. So you'll know immediately if it's something that's going to be an option for you or not. The next thing that we're going to talk about is repurposing your policy when you convert your life insurance. A lot of folks do not realize that if you have a life insurance policy, that can be converted into cash that will pay for long-term care. So families are not always familiar with this. Most seniors do not, again, know. So life insurance settlements have become very regulated and transparent. Families need to be educated. So that's one of the things that we're going to talk about today. Who qualifies? A person must be 70 years old. The policy must have $100,000 in face value. The policy must be universal life term conversion. Also, I did see that the policy can be a whole life as well, or a group policy, just so you know. And it must be a health condition impaired. So you have to have a health issue that requires you to have the funding and be able to do that. The long-term care benefit payments can last on the average between 1 to 3 years, and benefit is adjustable. You can convert a policy in as little as 30 days, which is something that is important for folks to know also. So one other thing we will talk about here with the insurance is that once you do start utilizing that as a form of payment, you no longer make the premium payments, and the policy is no longer considered an asset, which would help rule against you if you did try to apply for Medicaid eligibility. So, you know, something to consider, just another option. There are so many different options that folks are not aware of. So that is another option that we wanted to bring to the forefront. Reverse mortgages, another issue that we would like to kind of touch on today a little bit. I want to just say too, not all of these options are right for each person. You really need to identify what your needs are. The time frame, are they short-term, are they long-term needs, you know, those types of things. How much are you needing money-wise? So, you know, really reach out and talk to some professionals. Kari and I, either one, would be more than happy to talk with you about any of this going forward in the future. But reverse loans or reverse mortgages, if you are 62 years or older and have equity in an existing home, consider that is something that is an option for folks. Many seniors are eligible for reverse mortgages. 75% of seniors own a home. Approximately 48 to 60% of seniors have lived in their home for 20 years. 70 to 78% of seniors have lived in their home for 10 years or longer. And most seniors have been in their home long enough to now have equity in it. Something else to consider is even seniors who consider themselves low income do sometimes have equity built up into their homes that they can use to pay for assisted living or long-term care in the home for example, with Kari's services. Qualifying factors has to be at least one borrower is 62 years or older. They own their home. Their home is a primary residence. They have about 50% equity in their home. And eligible property types would be multifamily, single home, condo, that type thing. And there is a financial assessment that you will have to undergo for that. Reverse mortgages, the upsides of reverse mortgages. We can talk a little bit more about that. The upsides is that the bank doesn't own your home. You do, number one. Some of the other things that are considered on the upside, the heirs of your heirs are not responsible for repayment of the loan, even if the home's value goes down. So that's something to consider as well. Income from a reverse mortgage is tax-free and doesn't affect your Social Security or your Medicare benefits. So those are some of the benefits from a reverse mortgage. There's always a downside to everything, of course. So the downside is that you are still responsible for the taxes, insurance, and upkeep, of course. Closing costs can be high with fees that are higher than conventional mortgages. Proceeds from a revenue mortgage may affect Medicaid benefits if you're trying to apply for Medicaid. And then the family home will not be able to be passed down to heirs. So just a couple of things to take into consideration when you're trying to make a decision with that. You know, we've shared quite a bit of information with you today. Just a little recap, long-term care insurance, veterans aid and attendance, both very, very popular benefits that folks use on a regular basis. Bridge loans, another one, especially with what I do for a living. I'm not sure that folks utilize that as much with in-home care, but it is certainly available to you to use it for whatever care that you're trying to achieve with your loved one. Reverse mortgages and life insurance. Elder Life Financial is a company that we utilize on a regular basis. They are just another resource for folks. They absolutely can get, if you get in touch with them, help you with any of the benefits that we've talked about today, as well as AmadaCare, which Kari did talk with you about. So those are just some more of the options. VA flyer that Kari has provided for us today as well. And just so you know, whoops, excuse me, this thing is extremely sensitive. Just so you know, we just want to make sure that you guys realize that we're just a resource to you. We are not selling anything. We are not promoting that any of this is the best way for your family or your situation. These are just options. Kari's information is here. Mine is here as well. Please get that information, write it down. If you have any further questions or there's anything else that we can assist you with, we would be happy to do so. Stop sharing my screen, Kari, so we're together again.
Okay.
But again, we're not promoting one way or another. We are absolutely just trying to be a resource for folks.
Yeah, I just would advocate for preparedness. I think many people are surprised that Medicare does not pay for home care or assisted living or really anything beyond immediate nursing home needs. So a lot of times I'll get a call and they'll say, well, mom's got Aetna Medicare.
Yeah,
But it doesn't pay for either one of these things. So,
no,
you know, we're just trying to show you some different ways that you might think about looking at some other resources, just so you're prepared when things do happen, because odds are they're going to all of us at some point.
yes. And I mean, having a plan and knowing these options in advance and discussing these with your loved one and your family and having a plan and knowing what you're going to choose, the path that you're going to go down when that time comes, it truly saves families a lot of stress and all of that when it comes to a medical crisis and your loved one's sick and you need to make big changes and you're not exactly sure how you're going to do that. But when you know you have resources, you've researched them, you know that's what works, that's guaranteed. Because truly, unfortunately, I've been in healthcare for a very long time. And unfortunately, the admission stay at nursing home, rehabs, hospitals, all of that has been shortened to a point where you're barely recovered. You know, most folks need a little more care than what they're going to receive. But that's just where we are in today with healthcare. So it's just important to know in advance and have those options. Please, if anybody's watching today and you need a little more help or a one-on-one conversation to help get some more information and understand better, please call me or Kari. We'll be happy to talk with you, guide you through it, get you to the right people, whatever it is that you need. So, and I appreciate Putnam County for letting us be on here today and talking about this. And West Virginia, it takes a village. So excited to be a part of that as well. And I just thank everybody for watching.
Thank you. Have a good evening.